Welcome to the deep dive. Today, we're pulling back the curtain on something really fascinating happening within the UK. It's this quiet, almost parallel financial system being built by the ultra wealthy.
Right. Our sources are calling it a kind of modern reboot of the old gentleman's bank.
Exactly. The mission for us today is to explore this high stakes world and figure out, why it's replacing traditional banking for the elite.
And the numbers are just staggering. We're talking
Mhm.
private loans between peers from £3 million.
All the way up to 50 million.
And you have to look at the collateral they're using. It's not just cash. It's property, fine art, yachts, even private jets.
Which brings us to the central question. Why are they turning to their social circles instead of, the big institutional banks?
That's a great question.
Because the most surprising insight, the thing that really underpins these massive deals, isn't the collateral,
No, not really.
it's character. We have this quote from Adam Russ at Deutsche Bank, and he just puts it so simply. He says, "It starts with character. It's the first thing you assess." But hold on. Character. Are they seriously saying they're just ignoring standard financial due diligence?
Well, not ignoring it entirely,
That
but
just sounds like a huge amount of risk, right? A sort of modern version of extreme counterparty risk.
it does. But what you're seeing is the rise of what we can call relationship finance. It's a high-trust economy.
Built on what? Reputation.
Reputation, discretion, and maybe most importantly, speed.
Yeah.
It's filling the gap that banks left behind with all their bureaucracy and regulation.
So they're betting that the risk of lending to a peer is actually lower than the risk of losing a deal while you wait for a bank?
Precisely. Waiting 3 months for a compliance committee just isn't an option.
So let's talk about the drivers here. What's causing this shift right now? Our sources point to two big forces. First is the retreat of the banks.
Yeah, they've become very cautious. Higher interest rates, complex compliance. They're just risk averse, especially with things like London prime property.
And that caution feeds right into the second force, doesn't it?
It does. It's what one lawyer, Laura Uberoy, called the liquidity paradox of the ultra-rich.
I love that phrase.
It's perfect. She said, the trick to being a multi-billionaire is having zero liquidity. They are so asset-rich, property, art, companies, but they can be very cash poor.
So when a deal comes up, they need cash and they need it fast.
And they absolutely cannot afford to wait months for a bank application to crawl through the system.
Which brings us to how this actually works on the ground, especially in real estate. We're seeing family offices, these private firms managing huge fortunes, setting up their own debt arms.
Right. It's becoming an alternative way of investing into real estate for them. They're not just buying property anymore.
They're becoming the bank.
They are the bank. Look at a firm like Cohort Capital. They've raised over £1.5 billion, mostly from these family offices.
And they're moving fast.
Unbelievably fast. They financed a £60 million loan for a student residence in Paddington. It took them 10 days.
10 days. That's the difference between closing a landmark deal and losing it, and the interest rate.
12%. That's the premium for speed. A private lender can wire money in a week. A bank is still doing due diligence months later.
And the rates really tell the story. Simple loans backed by solid property, they start around 10%.
But if you're dealing with what one source called the funky things, riskier assets, those rates can easily jump into the 20s.
So that high interest is basically the fee you pay to bypass the whole system.
It is. And they prefer property as security, not because it's exciting, but because it's, and I quote, quick and easy to take charge over the assets if there's a default. It's all about efficiency.
So if we step back, this isn't just some niche trend.
No, this is a profound strategic shift. Private capital is quietly, but very aggressively replacing institutional capital.
And it's even filling vacuums left by, say, Russian investors who pulled out after the 2022 sanctions.
It's a huge, silent reshaping of financial power.
So what does this all mean for you, our listener? The power is shifting. It's moving from global banks, which are bound by compliance,
To global families, who are bound by relationships and trust.
this whole parallel system proves that money, like water, will always find the quickest way to flow.
It always does.
So I think the biggest takeaway for you, whether you're an investor or an entrepreneur, is this. In an age of complexity, relationships have become the new currency. They dictate who gets liquidity and who doesn't. So maybe you should build your network like it's your bank account.